Whatever you do, don't die in Massachusetts. The Massachusetts estate tax is a bear. All right, so let's look at this article right here from Harry Margolis, who's a founder, I believe, of Margolis, Bloom, and Agostino. I can't say it very well. I remember when I worked for a firm in Portsmouth, New Hampshire, 6 years or something like that. I worked for about a year, small firm, and I had a bunch of clients in Massachusetts, and they were ignorant about the estate tax in Massachusetts. And ignorance is not bliss when it comes to taxation. And I remember I said, dude, we got to get some estate planning done because they got $1 million estate exemption back then. That was it. And let's actually take a look. I'm curious. Check this out. The Massachusetts Association of Realtors, you got to say tour, can't say realtor, it's Realtor. The median home value was 616,000 schmackaroonies, which is well above the median national of 396. Anyway, so if we go back to this, back in the old days, just a couple of years ago, if you had an estate over $1 million, you were subject to an estate tax. And if you just had a median home with, say, 600,000 schmackaroonies, you don't need to have that much more to have an estate tax. 400,000 in IRA. Oh, what else is included in your estate? Anything you own, to include life insurance. People say, but life insurance is tax-free. Tax-free from income tax, but not tax-free from estate tax. Life insurance is part of your estate if you own it. That's just a fact. A jack. Anyway, so they've raised the estate tax in Massachusetts, the exemption, if you will, to $2 million. So here we got in fact, right here. Since the threshold is raised from $1 million to $2 million, just like I think it was just 2008, 19, 20 or something like that, which can be as much as $4 million for a married couple, which undertakes basic estate planning. We have covered the change in the law, what it means for out-of-state real estate, and the effect of gifts. A number of people have asked for one more planning aid, a chart showing the tax for different size estates. Here's a $3 million estate. You pay $82,000 in estate tax, which is 2.75% of the total estate. Now, if you have a $5 million estate, you pay $292,000 in estate tax, which is 5.8% of the entire estate. Remember, life insurance is included in estate, at least the federal estate. I can't say for sure if it's included in Massachusetts. I can almost guarantee it is. Let's take a look at what they say about out-of-state real estate. Let's check this out. It gets funky. Under the old law, out-of-state real estate, so if you own your house in Maine, which all kinds of Massachusetts people do, that's why we call them massholes. Massholes. They own the real estate. Basically, Maine is Massachusetts North. It was owned by someone who died as a Massachusetts resident. It wasn't taxed. Neither was it included in determining the side of the decedent's estate. Our understanding of the new law is that out-of-state property will be included in determining whether an estate is taxable, whether it exceeds the $2 million threshold, but that the estate tax will be reduced in proportion to the amount of the estate outside Massachusetts. So here's an example, and this is freaking nuts, dude. Let's assume an estate is $1.5 million, which includes Massachusetts real estate, investment savings, and retirement plans, plus, plus $1 million vacation property in Maine, all right? So the Massachusetts assets are 1.5. The $1 million property home in Maine is $1 million. So that's 2.5 total estate, but only 1.5 in Massachusetts. I hope that makes sense. Under the old treatment of the out-of-state property and the new $2 million threshold, this estate would not be taxable because this $1.5 million of Massachusetts property is under the threshold of $2 million. Under the new treatment, though, the estate is taxable, but only at 60% of the tax normally paid if all the real estate were in Massachusetts, since 40% is outside of the state of Massachusetts. The normal Massachusetts estate on $2.5 million, the tax is $39,000. The tax in our example would just be 60% of that, which is $23,000. So it's crazy. This, in fact, the reverse of how the taxes always work for non-Massachusetts decedents owning property in Massachusetts. Let's assume the facts in our example are reversed, and the decedent was a Maine resident who owned a $2.5 million estate, with $1 million consists of a vacation house in Massachusetts. In that case, the estate would pay 40% of the normal tax. So even if you're domiciled in Maine, you still got to pay estate tax in Massachusetts. One problem or irony of the new tax structure is that for these estates not far above the $2 million threshold, especially when part of the estate is outside Massachusetts, is that the administrative cost and burden of preparing and filing an accurate estate tax can seem well out of proportion to the actual tax owed. 100%. It's freaking nuts, dude. And so they made it that much worse. And the irony of all ironies, part 2 of this, is check this out. Here's from Boston University. Why does it keep doing that? Annual Massachusetts out-migration hits 39,000 people, which is 1,100% above the last decade. Check, this is from BU. And it could rise to almost 100,000 people by the end of this decade, which costing Massachusetts almost $1 billion in tax revenues. Isn't that crazy? Annual net outmigration from Massachusetts has soared by a stunning 1,100% since 2013, according to a BU study. Let's see. The age group right here. To make matters worse, those who are leaving tend to be younger and earn more than state averages. These are the people the Commonwealth needs to bolster its future workforce, or so be old fogies like in Maine. The age group leaving in the largest numbers are 26 to 34, although most of the lost adjusted gross income comes from people almost my age, 55 to 64. People who are at the peak of their earnings and are retiring, and they're saying, I'm getting the hell out of Dodge. More than half the people who exited Massachusetts earn well over the state average income. And here's why. Income tax, housing costs, and cost of health care are the largest drivers of outmigration. Well, I thought Massachusetts is so liberal. I thought they had health care squared away. They got so many great places. The 11 states to which Massachusetts lost the bulk of its departing are all scored better in those three categories. 8 of the 11 states score better in housing burden. This isn't just retirees leaving Massachusetts. Over half the residents who leave stay in New England. Crazy. The top 5 destinations are Florida, New Hampshire, Maine, North Carolina, and Texas. There you go, man. You don't want to die in Massachusetts because the state law, and especially if you own property out of state, it's insane. So all these people are like, I got a property in Maine, I don't have to worry about it. I hate to say it, dude. They're gonna get you. What's your stupid governor's name? Healy, is that her name? Maura Healy, whatever the hell her name is. She sucks, dude. It's like what, 3 Republican legislatures of all the state house and the state senate. It's like 3, something like that. It's insane. And of course, those Republicans are horrible anyway. All right, don't die in Massachusetts. If you gotta die, die with your boots on. God bless. We'll see you.